How do you feel about the housing market right now? Things are going great? Things are going kind of poorly? Or it's status quo? Well, in today's Cherry Bomb video, we're going to take a look at placing a bearish trade on the home building sector. So stay tuned. We're going to hop right into the platform. Hello again, this is Neil here, and welcome back to Option Theory. We are putting on today's Cherry Bomb trade for April 24th, 2020. If you're new to this channel, I'd love it if you'd hit that subscribe button and ring that bell if you're interested in doing paper trades 4 days a week to practice your option theory, right? We're putting it to the test. Why not learn by doing? So, quick plug is over. Let's hop on into examining this trade. So this trade is going to involve the sector here, the home building sector here. And we've got the 1 year chart pulled up, and we can see we have our high that was back in February and our low that was, of course, mid-March, thanks to the coronavirus probably, right? And today's Cherry Bomb email, which I do recommend you subscribe to those. You'll get those emails before my videos come out. And he does a great job talking about the mortgage industry right now and why that's having an effect on this particular underlying. And you can see after its dip, it has come back, recovered some, but now seems to be in a range. But rather than doing a neutral trade, we're going to say that we're going to put a lid on it, that it's because of the mortgages and what banks are doing right now. You got to check that email out. It's really neat. That we're going to put a lid on this and say it's not going to go over this, right? We're going to do that using a short call vertical. And so let's analyze that. So I'm going over to the Analyze main tab and then going to the Add Simulated Trades, or you can click on this and add simulated trade right here. We're going to the June weeklies with 42 days to expiration, which does match the Tasty Trade approach, and that's what we practice here. The well, I should say that that's what I'm trying to practice here. You can try to practice whatever system you want in this, but I'm going to try to model what I believe as closely as possible is the Tasty Trade mechanics. So with these 42 days to expiration, which is close to the 45 they recommend, we're going to twirl that open. And we're going to see some things that maybe don't match the Tasty Trade mechanics, right? So this is kind of a little bit of a theme that oftentimes to get to that 45 days or near 45 days, you end up in weeklies, right? And with weeklies, you may or may not know, but the bid-ask spread is usually pretty wide. I mean, this is not as wide as yesterday's trade, but still pretty wide. Okay, so here we're looking at the 34 short call and then the 36 long call. And rather than doing these individually, the way I recommend doing them is, since I'm going to be starting with a 34, I'm going to right click over here and I'm going to choose Analyze a Sell Trade and go up to Vertical. And we'll see here that it builds us a 50-cent wide call spread. I'm looking to do a $2 wide call spread. Reviewing the mechanics on that, of course, here we've got the $2 wide. And that's going to be our maximum risk is going to be $200 because I'm only doing one contract. You can pick a size that feels better for you. If you feel like $4 is better, you could either do a $4 wide or you can increase your size, right? There has been research done on Tasty Trade's website that talks about whether or not you should go bigger than the number of contracts or wider. And I'll let you find that. But anyway, $2 wide minus the $60 credit, right? Leaves us with what risk? Don't want to do the math? You can right click this. And I always recommend that you do that. And you can see here that it's $140 is our maximum risk. Now, before I route that, I always like to see what our probabilities are. And I like to set those to the chart. So it is a call vertical. Not shockingly, we benefit if the underlying goes down, right, goes this direction down here. But I want to set this to June, and it is 5th up here. Set the calendar to June 5th. And then I want to set my slices over here, break even at expiration. We see we're looking at a 71% probability of profit on this particular trade. I'm going to crunch that down. All right, I want to set this price slice to my chart. I covered how to do this in another video recently. If you want to go ahead and watch that, I'll put a link right up above. But I'm doing it right here too, so I'm going to go to set slices to chart and that one there. Now I can see, I can visualize that I don't want XHB, right, to go above this line. And if it does, then I'm past my break even. And if you're interested, if you wanted to learn how to set alerts for when this becomes profitable, I'm doing a video on that one tomorrow morning. So stay tuned for that. And maybe, like I said, hit that subscribe button and ring that bell. You'll be notified as soon as that video comes out. So with that said, I'm going to go right click this trade, choose confirm and send. We've already reviewed this. When it hits send, it's going to go over to my working orders. And this is where, if it fills, and that's a big if, based on the fact that if we go back and look at that, there is not a lot of open interest in these contracts. So not likely to get filled. But hey, I did get filled yesterday in Chipotle, and I did not see that coming. So that's nice. All right. That is our paper trade for today, our cherry bomb trade. I thank you so much for joining us. If you're going to put this trade on, let me know. Leave a comment below. And if there's anything you'd like me to see that I do in a how-to video for the weekends, let me know. I'd love to hear that in the comments below. So, thanks for joining us. I'll see you again soon.